Welcome, traders. Welcome. It is Sunday, the 27th of March, prepping for this coming week, Monday, the 28th of March. And obviously, this will be the last week of March, kicking off into April. I have no idea where the time goes. It is frightening. So very quickly, kicking off into the ongoing global fundamental concerns. There's quite a few big things, and there's things that we have to be paying attention to. As opposed to just trying to create content. There's stuff we really, really need to be watching that it will impact us all. Anyway, so to carry on, there's no updates in terms of the rates of inflation for the US. It's still at 7.9 for February. Okay, so we'll see how that goes. We know that the invasion of Ukraine is still ongoing, but there are now regular reports of Ukraine reclaiming cities that were previously lost. A high number of, I think we're at 7 generals being lost for Russia. I mean, there's no doubt that based off the current kind of approach, they're not going to come out on top. The fear is always of how it's going to be escalated and what's going to happen. And so I find that obviously quite interesting from a historical point of view. But it would seem, so I'm optimistic about that. But the losses and the tragedy of the whole thing and the waste of just a silly idea, just ridiculous. And so it's a shame that it had to happen at all. Ukraine has become, I think, just a beacon of democracy and the potential of that. Speaking of which, the US, of course, is still under attack from within. Democracy itself is being very much undermined. At the moment, there's just so much that's turning out that there's just fascism is very much on the rise in the US and exclusively within the Republican Party. And so this is a very real threat. And of course, that means that if the US becomes an authoritarian state like China or Russia, this is going to be a big problem for the rest of us, because that means that China and Russia would be the two biggest effectively GDPs, and they would become authoritarian. So that is a real concern. So we need to be keeping an eye on that. Now we've got the general global market bubble, which we're going to have a look at the charts at the moment, see how they fared. And of course, we've got climate change, which has been really bad, but is now reaching extreme levels, which means fires and massive extreme heat differences. What was the difference in the 70 Fahrenheit degree difference in the poles, in the North and South Poles, something like that, something extreme. This is just absolutely ridiculous. So the stuff we need to get under control in terms of what is going on in terms of news updates this week. Really, my focus is going to be around non-farm numbers coming out on Thursday and Friday. There's going to be a lot of added volatility for the US. Generally, I'm expecting the jobs numbers to just continue to look really good, but because that's not really where the focus is right now. So there will be added volatility. The numbers are phenomenal coming out of the US, and there's no real expectation for that to change, but the cost of goods, so to speak, is going up. And so I guess we're just going to have to go back to not going anywhere. If anything, the argument for working from home is only getting stronger right now. And that's it. Let's go and have a look at the charts and see what they have to say. All right, so looking at the volatility index, just what I would highlight here is that just large bearish candles. This is so-called or apparent drop in terms of volatility, but I don't think it's necessarily it's an indication of a kind of a loss or an aversion, a movement away from activity, as opposed to potentially there being other issues such as liquidity. Just noticing we're still within an uptrend. We are coming back down to a particular number 20. If we're looking at that, I'd like to see if we do find some support there and then reverse back up. So nothing I don't think there's anything hugely significant about this at this point in time. The dollar index to me is still looking particularly bullish. Okay, we've got a slightly lower high here on the daily, equal lows finding some support. So we can see 98 has held as a level of support. We've currently finished off with Friday being a nice bullish candle. We've got the weekly chart still looking with a bullish inside candle. In fact, it's a double inside candle. That's quite interesting. And this leads to this is looking effectively as though this is leading to a bit of a breakout to the upside. So I do know that at some point in its future, it has got 100 in its sight, but we can see from the monthly here that we've had trouble at 99, managing to work its way up to 100. So this is really where the battle comes in. But I would say at this point in time, a little bit of a struggle here, but it is still pushing. It really wants to see if it can get past that 99 level. So what I'd like to see is if we can push and close above that and then push on further to 99.50 and then onto 100. Alternatively, are we going to see an attempt and a rejection, and then we'll see a push back away from that? So just I'll be watching major levels around that, especially looking at euro dollar. You can see a similar thing here. We're starting to look as though we want to head a little bit low, but we've got to keep an eye on this, just on these lows as we head down to those for potential rejection of those. You can see actually that 4 hour looking very much. I'm just going to mark it as though it is going to check this level of support. So if we do break below that, I'll be looking for moves heading down towards 1.09. I think that's a fair approach on that. We still have a down downtrend effectively on the weekly. We could see we pull back right into, almost beautifully, right into that 3 at 2 and 50 area. So looking into that zone and holding a little bit of a bounce off that 1.08. So the question is, will that momentum revert back to a stronger US dollar, weaker euro? Right, so looking here at sterling, sterling also looks as though it has this intention and wants to break below that 31.74 line. It's still on a downtrend on a monthly basis, and it has produced an indecision candle on the weekly. So that's really what the battle is about for sterling here, is at this level, these previous lows, this level of support and resistance. Is it able to get back up above that? There is a little bit of bullish divergence here on the MACD, so there is a possibility here that it's going to attempt to climb up a little bit higher. And so all of this, I think, ties in again to what's going to happen with that US dollar this week. So might just see that it attempts to push a little bit further, and then there's a rejection there. Just noting how the Aussie dollar, US dollar. Look at the change in the candles in the length as well of as well as the wicks in relation here. These are becoming more depletion and a little bit more indecision here. We go from longer bodies to shorter bodies, and so there's just indicating a slowdown of that momentum ahead of this major level of support and resistance. You can actually see it here. If you want to call it 75.30, that's acceptable as well. And actually, so this is also an area where there might potentially be a bit of rejection. But that monthly looks to me either going to be range bound or bullish, but it doesn't, at this point in time, does not look heavily bearish in any way. So this week, I'd be looking to see if we get some corrections, perhaps on the 4-hour, deeper corrections, if we do get that, or a daily correction down to 74, 0.74. And then looking for trend continuation setups would be my first position. We could potentially get that reversal. Same thing here with the Kiwi dollar, US dollar. It does look as though it's prepping here for a bit of a correction down back into the old high 69, 0.69, or even a little bit further down towards 68. But it has broken that sort of downtrend on the weekly side, and so there is this possibility now that it could potentially head high. So interesting, just looking at those first four here are hinting at a possible switch in a direction here, where we might even end up with a weaker US dollar. So just interesting to see that happen. Okay, dollar yen. Massively now overextended. Look at this, just single monthly candle compared to anything we've actually seen going all the way back to 2018. Just absolutely huge move. Look, it has been trying to break through that level for a very long time. All right, so it still has some room to go. We can still head up to 123, 125. So we've broken past the major barriers right now, or I guess you could argue we're close to them now, that they might still be a factor. So if that is the case, then I would expect to see a retracement here down to 118.50 is absolutely valid, even as far as 115.52 to come back to that. And again, that would then show rejection, which also might mean that we're going to revert back into that range. So there's enough here that says that usually I would say that I can narrow it down to a most likely out of one of two situations. But in this case, we're looking at a potential here of 2 or 3 different possible situations and how they will play out. So I'm trying to kind of call it on what I think is the most likely direction, but there are certainly options here, and that's what I find intriguing. Dollar Swissy, of course, overall, just had a really strong rejection the week before that. This week, a bit of an indecision candle. And that could well mean that it is intending that it stays back within this range, okay, which would lead to a weaker US dollar. And it would just be a continuation of the general garbage that we've been seeing here. So when I say a chart is garbage, I just mean that it has no clear direction. It's clearly not being actively traded by speculators. It's being just transaction-based, meaning that, whatever exchange rates and physical transactions are happening, but there's no real trading market for it. Okay, and a little bit of a rejection there, but this price action alone is actually not enough of a rejection. This actually often would indicate that there's going to be a continuation on that one. Dollar CAD. Okay, dollar CAD. Wow, what a beautiful move in terms of that. So I was on holiday. I didn't capture. I got one or two of these initially, but there was a lot of potential there. So look at this really bearish candle. At this time, it's a bearish engulfing, at least, of the previous candle. We've also got very nice rejection of those coming into these lows here. All right, but if it continues beyond that, I don't see why it couldn't go down to 1.23, and there couldn't therefore be a continuation of this just carrying on down. But I am noting that we are entering an area here where we might find some temporary support, and therefore there could be a bit of a retracement and a continuation to the downside. I think at this point I'm leaning more continuation trades to that, so more to the downside. Let's see how that goes. All right, let's go and have a look at the cross charts and see if there's anything of interest there. All right, so the CAD pairs look, I really like the look of them. They're some good Euro CAD, Pound CAD looking nice and weak, so good continuations to the downside. I like the look of those. And then, of course, with the Pound Yen, with the Yen crosses, although they're overextended, overall, I do expect some of this to continue throughout April as well, so that's going to be great. But in the sort of shorter term, I'm looking here, there's some potential bearish divergence here indicating that there's likely to be a retracement either on the daily or the 4-hourly. Now, if it's very overextended and it's going to have a deeper correction, that's great for day traders. They'll be looking for 15-minute, 5-minute time frame corrections to take some shorter term trades, perhaps Monday and Tuesday, and then later on in the week to find a potential swing trading setup where it turns around. It looks like it wants to continue and looking for trend continuations to the upside. But overall, I guess what I'm saying here is that it seems to be that the momentum for the yen crosses over the coming months could be potentially to continue to the upside with those shorter term corrections, providing opportunities for day traders to trade both ways, but for swing traders to wait for trend continuation setups. Okay, let's have a look at some of the commodities. So far, the GSCI is looking as though it's continuing to push on. This kind of makes sense, I guess, under the current sort of fear-driven demand. So I guess we could see the commodity is going to keep going up as a result of that kind of concern with tensions, and obviously an outright war, as well as inflation, I guess, is where it's going. So ounce of gold, let's have a look at that. So yes, we still have an uptrend on the daily. That looks good. Very happy with that. We've got a weekly bullish candle. It's back down at these levels. This, ladies and gentlemen, is a very nice place for gold to resume its uptrend. I'm quite happy with that. And it would be really interesting to me to see how we finish the month. Does March finish with a nice higher candle? I'd be really happy to see that happen. And so, yes, that's a possibility. So what I'm looking for is to see this coming week is to see the market break the high of this, which is 1966.24. See the break the high of that and a continuation to the upside. Okay, so there's actually still a trade open from this consolidation. Breakout looks pretty good, and so expecting price to continue to the upside. So far, looks good. Let's see how it goes. Silver, same thing. It's going to be the same approach, expecting that to continue up. And in fact, silver's got a really nice amount of room to go on this, so that would be good. Look, I mean, the general behavior of silver isn't fantastic, so just because it has more room to go doesn't mean it's just going to, like oil and water, it's just going to work its way up. But it just has that potential. So let's have a look. Copper as well. Copper overall is not necessarily as stable, but it is pulling into an area where it could look for continuation. It's got major resistance here. So out of those three so far, I prefer gold, then silver, and then copper. Let's have a look at natural gases and crudes. You can see here, so this is important. I think on the weekly here, we can see we've got this really bullish candle closing right near the high, just above the high of this previous rejection and all of this exhaustion over here. So this is an area where it's going to potentially battle. But what it is doing differently this time, it's closing right near the highs. There's a different kind of hunger here, as opposed to a move at a failure. There's a lot of depletion in this area that just isn't existing there anymore. So it does imply that it's going to continue going. West Texas as well. This is beautiful. Really, really nice pullback. Nice little bullish candle off that 110 level. Overall, a weekly swing low, looking nice and bullish. And so again, similar to gold. So the very similar price action behavior here. It hints at the fact that there's no signs of weakness or exhaustion here. No signs of divergence. All of this is saying that the path of least resistance is to the upside, and therefore it's going to continue. So that's what it's indicating. Brent crude as well. So this is just a previous trade idea playing out. But yeah, so far, pull back a little bit further, but does look as though it's continuing. And look at the 200, the 50, the 20, and the 10. They're pretty much in alignment, just pretty much heading out. The weekly, they look really good. MACD's nice and bullish. All of these things technically are just indicating that it can continue. There's no reason why it shouldn't. Back up to where those old highs are. So sugar, let's have a look at that. So we've had this turnaround, we've had this swing low on the monthly. We are now looking more and more bullish, but again, this $20 level is going to be, the 20 cents level is going to be quite, $20 level, I beg your pardon, is looking quite a challenge. So I want to see how the market responds to that. Okay, coffee. All right, so coffee had a bit of a rejection here. You can see that bearish divergence on that failure around the 250 level, and strong rejections here. So this means it's heavily overextended, cannot go anymore. There's just no one above this point. And then let's go. So the question is, how far is that correction going to be? It really doesn't have to come back far, but what I am going to be looking for here is a nice bullish monthly candle and a rejection candle to give me that clue that it's going to do continuation to the upside. It's not there yet. All right, coffee. Oh, were we on coffee? Okay, sorry, we were on coffee. What is wrong with me? Sorry, ladies and gents, I don't know what's up with me. Okay, wheat. All right, very much overextended here. You can see much more exhaustion here. So this is not necessarily the same as gold and oil. This is almost like a knee-jerk reaction based off this consolidation versus gold and oil have been creeping up anyway. And I think that's why we have the difference here. This does look as though it's potentially going to stay in this range, maybe push a little bit higher. But this is almost exclusively, you can see this price action can be correlated with Russia, Ukraine, whereas gold and oil were creeping up anyway. And so it's related to that. It's likely to see pressure to the upside. Look at this, just beautiful. So this is really, really nice because we've been watching this for a couple of months now. Closing right near the highs. This is going to continue higher. Cotton looking pretty good. But I would say on a monthly basis, it is very overextended. But we've had reactions like this in the past, 2010, 2011. So we can see that it's fair to say it's going to continue a little bit higher, but it looks okay at this point in time. Price action looking fine. I'd be looking for pullbacks, either day traded to the upside on lower time frames or any pullbacks looking for continuation trades. All right, moving on to the global indices. All right, so now I can hear myself repeating words. This tweezer impacts the tweezer pattern. Actually, I think I know what's happened. I've been flying a lot, and so I haven't really had the last 2 nights. I haven't had much sleep, so that would explain why it is. This is sort of a tweezer pattern. This is really a good indication of a very likely reversal to the upside in this case. But this is still a challenge. I said this last week. I still recall that we did break a little bit high, but we haven't continued much. And so one of the potential plays that could unfold would be that, we did have this bounce. There's lots of buyers down here, but just not enough up here. And so if this was a longer term, slowly but surely unfolding into a bigger bear market, which is of course possible for whatever reason, because there's various reasons throughout history. But if that is going to be the case here, then this could be a clue as to what's going to happen here. So this almost appearing a little bit like a hanging man. And so the question is, it would keep this downtrend intact. So a lot of buyers here, a lot of enthusiasm to keep going, but not enough to carry that momentum over. So that's what I'll be looking for this week, is to see if we can continue that up. So far, all of this looks bullish. It looks more bullish than bearish, but it doesn't look super bullish. It just is looking neutral bullish. And so I'll be looking for a consolidation breakout of this area, but so far it looks like it really wants to do that. And looking for trades to the upside and just trading more cautiously as I approach these levels, looking to take profit sooner, manage my stop loss, keep my risk under control. Looking here, for example, at the mini S&P looks really good so far. It's got to get to this 4525 level to continue, but it looks like it's got its sights on breaking these highs. So far, again, looking more bullish, and that monthly candle super bullish, and it's a justified one. It's had a really good correction. It's looking nice and bullish. People can rationalize it and say, well, it looks like Russia's losing the war, Ukraine is there, we're going to get back on top, blah blah blah. There's always a story there, but the price action has had a really nice, much overdue correction. Looks pretty good. The question to me is really, is there enough enthusiasm to keep it going? And when we get to the tech stocks, it's because they've had such a heavy sell-off. But again, that sell-off could simply just be seen as a fire sale. It could be a fantastic opportunity. Some investors would, Buffett and whatnot, whoever cares about tech stocks, would find that as a massive sale and a really good entry opportunity. And therefore, this could just be one of those moments where we look back a couple of years from now and it was just a rare moment of being able to buy everything at a massive discount. And so again, here, all of those points to the market really does intend and genuinely wants to go back up. And we're going to see if it's going to do that. So here, I'll be looking at the mini Russell. It's coming back into this area. It's got to get above that for me to really feel that confidence coming in. And so I want to see it do that first before I feel proper confidence about it. All right, FTSE. So again, look at that beautiful recovery. I mean, just enthusiasm to get all the way back up to those highs. Phenomenal rebound. But it's got to get past this, because at some point you could argue that this could be ultimately just that last sort of death rattle. But man, what a recovery. Absolutely, if there's any kind of retracements that could be seen as, for me at least, continuations to the upside. I mean, there's no way on a daily you would have had a swing trading opportunity to get into here unless you looked on the lower time frame, sort of cleaner breakouts. There just wasn't enough of it. Here you've got to move sort of extension retracement. We haven't really had that. Okay, but the point is, so far, I got my eye on these resistance levels and want to see how the market responds to those. Again, similar here, you can see the DAX coming back up into this area, into this level of previous support, and producing a small inside bearish indecision candle. This is in isolation would be a really great potential swing high as it continues to the downside, and we do have a bit of an indecision candle on the monthly at this point in time. So that's why I'm just watching these, because I want to see if we can break out. I want to see it close above that. Even better would be to close above 15,000 and to see if it's going to do that. And then I'll really kind of relax a bit more, and then we'll see how that goes. Same thing again, we've got the Euro stocks has pulled back into the moving averages, and so yes, this could all still be part of that last push up that we see if we look into past corrections, bigger corrections that we've had, and then we could see the market start to head a little bit low. So I'm wary that, as good as things do seem to, as great as the market seems to have recovered, that is not enough. It's not enough yet. But I have to, again, you come to the Nikkei. This is a very healthy bullish candle. It's a very healthy bullish candle. It's not something you would normally see if the market is starting to fall apart. Here you can see it just gets exhausted and has a correction, and then has a healthy recovery at this point, or at least it's rested and it's ready to carry on. Okay, there's still a weekly downtrend. Oh, no, that's not true. We've broken this downtrend here. We're back up above this level of support. Man, that's a, green shoots potentially, ladies and gents. S&P ASX, okay, nice bullish candle. Okay, again, we've just got to get past this. It gets tricky as we approach these levels for traders like myself. I'm always want to take my profits ahead of these levels and use stop losses, and this gets really choppy. So for me, the best parts of the moves back up to the levels, and then once we break through to all-time highs. But the tricky parts are as approaching these levels, the profit and the volatility increases. The potential profit decreases, and the volatility increases around those levels. Okay, moving on to equities of interest. Let's have a look at Royal Mail out of the UK. So this is LSE. Still a downtrend on the monthly, and did do a bit of a retracement. Hasn't really gone anywhere here the last week. Okay, so nothing to say here. Nothing that is really going to be that significant for the coming week. Amex, okay, big bounce off that. This makes sense. A couple of these are blue chips, so they're always going to do really well. This has recovered, but it's got the same struggle. It's got to get past those highs, or is it going to start to slip back down? And that's going to be something that will become apparent relatively quickly if it starts to drop below this 176 level. It's going to head lower if it manages to break up above the highs first. It's looking good. So Apple, that's a really, again, lovely, really nice. Boom. That is a very good sign. Okay, it's a nice, beautiful correction in isolation. Okay, imagine I've been underground for 6 months, or I've just simply had a media blackout. This, to me, would be a confident buy signal in isolation. But it's hard to do that when you hear what's going on in the news. ARK Innovation. Okay, so as I said last week, putting on the brakes here, lots of depletion to the downside. This is now in an area where it is quite keen to turn around. Didn't really manage to do much this week. It's actually pulled back in and produced another indecision, potential continuation signal here to the downside. So what I need to see this week, and I think this is going to be fun as a technical exercise, is to see it not do that. I want to see it break up and close by the end of the week, see it break up above these lows. It might not be there yet, but it is definitely in the beginning of the end of the down move. Okay, so that's great for me. I like the look of that because that could be some potential buying opportunities. Okay, then moving on to AT&T. AT&T is not really going anywhere right now, but it is managing to move a little bit higher. So for now, my expectation is this will continue up this coming week. Let's move at Berkshire Hathaway. Continuing. Okay, again, looking for pullbacks and to continuations. That monthly candle now starting to become a little bit ridiculous. Closed right at the upper limit. I mean, it's ridiculous. What was the difference between the high and the close? 359.01 and 358.76. I mean, just very, very bullish, but it's now becoming sufficiently overextended on this that a correction on the monthly is going to become due again like this, a bit of a consolidation like that. And so it's going to be interesting to see how that goes on the weekly, on the daily. So I'll be looking for daily corrections for continuations at first of all, and then when I get bearish divergence, I'll be looking for a bigger correction. So, but yeah, so I'm expecting to continue high this week. BP. Looking nice and bullish. Got a bit of depletion up here. It's got to get past that. I should actually mark that level very quickly. Just don't want to spend too much time doing this stuff. I'll move that up a little bit. Let's just get that a little bit higher. That'll do. I need to see it get past that level. ExxonMobil. It's already passed and managing to recover. Nice and bullish. It's going to take another move a little bit higher. Everything else looks fine. So that's going to do a little bit of a move higher. Coca-Cola. Yeah, that looks like it's going to just get past that 61.50, 61.45 level. I want to see you push and continue up, looking relatively decent. Okay, so from a daily perspective, I wanted to get past that $62 mark, but yeah, nothing there. It looks like that's going to continue on. General Motors. Okay, so General Motors also similar to ARC, putting on the brakes here, trying to turn around where it is at this level, and it's got a bit of an indecision candle there. So is it going to continue from that side or turn around? And I guess for me, I would like to see this consolidation on the 4-hour to break to the upside for that to be a sign of bullishness returning generally across the board. JP Morgan Chase is below this level, but that is a bullish candle, and I will be more confident if this closes near its highs by the end of the week. And that would also mean there's a little bit of a kind of a pause in the market here. Can it break and move a little bit higher? It's a downtrend on the weekly, so I need to see, in order for me to believe that this is coming to an end, and it is a monthly correction and it's just carrying on, or a monthly retracement before it does its next extension higher, I need to see this start to push up back in towards these old highs here, if that's going to be the case. Meta. So Meta has found its base, it would appear. It's found its base down here in this area. And the question is, can it close a little bit higher, or is that going to fail? And of course, what it's potentially going to do in this area is produce a bearish candle. So because there is that possibility that we're going to see that we could have a bigger bear market in the next 6 to 18 months. These are all these areas where I'm going to be watching that. Are we going to see continued failure at the highs and therefore deeper correction? Because if the markets fail at their highs now, that would lead to a bigger correction, because we had a correction. They should have recovered. They should have renewed energy. If they fail again, then fear is going to start to kick in and the market's going to have a deeper correction. So that's why I'm watching to see how that unfolds. Morgan Stanley, back into these level of support, like the DAX as well, similar behavior with a nice bearish candle. This in isolation, if it was a currency or a commodity, that would be a very valid potential for a continuation to the downside. The monthly looking a little bit more bullish here, but it's got that massive level of resistance actually at 103 that I want to see it get past. So again, I'll be looking for moves higher or lower, will give me clues as the week unfolds, which way it's likely to end up towards the end of the week. This to me is more bullish than bearish. If I look here at Netflix, it looks as though this is also finding a base. All of this showing the market doesn't really have that power to go much lower. And the sellers are sort of extricating themselves from those positions. It looks like that's going to attempt to push a little bit higher. So that's good. I'm hoping to see Netflix close higher this coming week. NVIDIA. Look at that beautiful move, change in trend on the daily, change in trend on the weekly. Well, not a change in trend. It was a downtrend. It's now finished the downtrend, but it doesn't have a confirmed uptrend yet. But it's a beautiful bullish swing low in this area. Fantastic. Technically, that has behaved perfectly. It's a buy signal. Okay, for me, to me, not necessarily to you. This is not financial advice. Let me stress that. This is just how I approach the markets from here. So again, let's have a look at that. PayPal, having pulled back into the moving averages into a level of support resistance, producing a small bearish inside candle in isolation. That is actually a bearish continuation pattern, but it is overextended and is starting to show exhaustion to the downside. So here, in isolation, there's a valid potential for it to turn around in April and start to head higher. And again, seasonally, we can have a bullish April. It can really happen. So here, my expectation is it's going to be fun. I want to see if this heads higher, but I think it's likely to do that. The spider as well. This one's starting to slow down, put on the brakes there. It looks like that wants to go higher as well, and you can see it over here. You can just see it. Big move down, pull back, big move down, pull, a little pullback, little move down, a little, like hardly a pullback, and then it starts looking more and more bullish. So I need an impulse move to the upside. That means an incredibly bullish candle to the upside would signal the end of that move. Okay, Spotify technology. Same thing again, similar to all the others. Big move down, and so the question is this week, it's putting on the brakes, is it going to turn around this week? That's going to be fascinating. So that will be in my content. I'll just put that into the description to see if this week is going to be one of those where we see a big move to the upside. Same thing here, we've got that weekly on Tesla. This looks like a very strong buy signal. My brother's going to be happy to see that. If we see us return up to those old highs, can we get past it? But this is hinting that that is what it wants to do. Okay, can it succeed in doing it? We'll find out. But that is what it is intending to do. Vanguard, same thing. It is intending to continue. It's looking really strong, really nice and healthy and bullish. Okay, so it's not like the markets move on necessarily on good news. When we start to see the early first year of a bull market, it's usually the news. And when is the news ever happy? It's always dreary. So that is really no way to trade, certainly to look at the markets technically. Vanguard, same thing. Okay, let's move on to the treasuries. So heavy sell-off. No love here. And again, this actually supports there's no one, there's no one interested in this. So one way of looking at it is that there is the risk within the stock markets is still preferable at this point to buying bonds, which is supposed to be lower risk. You would buy bonds to a degree. If you were Buffett, you would buy bonds to offset the volatility risk of an extreme stock market. Whereas, that's how he would that's how he would sort of rotate his portfolio. But it's not really the case at the moment. There's just doesn't really care. It's happy to see that market recover. So these are all signs that indicate that market has every intention and the confidence is still there. Same thing again, Euro bubble, so that goes across to Europe. The Euro Bund also heading low, so they're going to continue down. So they're good for shorts, and I think I spoke about that last week. Let's move on and finish and wrap up with cryptos. The fact is that if equities are going to recover, so are cryptos. Okay, so all of this to me very, very, very good signs. I'm, for myself, and again, not financial advice, there's enough info here that usually I'd say this is pretty much a done deal that it's going to hit back up to 60,000, if not 70,000. We could be range bound here again. I'll only know whether this market is really truly recovered once we break to fresh highs. So I'm always happy to call it more to these old highs to see how that goes. Ethereum, all looking good. Man, these are looking nice and bullish. Yep. Binance, Solana, these are still indecision candles, but that indecision candles are how we always get those that are turning points, and that looks great. And Cardano, yeah, lovely. First green candle since August 2021. Great, beautiful, love it. Bottom of the range, looking very good. So some good news. There we go. From the market, some good news. Plenty of opportunities. There's never a shortage of opportunities. But it is looking to me as though we're going to see some buoyancy in a lot of the markets. At least that's their intention. Whether they bolt out the gates and then hit a brick wall, well, we'll find out. But no, they look pretty good. So that's great. Anyway, look, wrapping up, have a fantastic week. Trade responsibly, trade carefully, manage your risk appropriately. This is not financial advice. Everybody's got their own plan. But I'll certainly be taking that approach. But yeah, and I look forward to seeing you in future videos. Thank you.